The market just hit extreme fear levels, Ben, but smart money is flooding into infrastructure.
Flooding in? During a panic? What are they seeing that we aren't?
They see the Oracle sector mindshare, which just exploded 540% in one day.
Wait, 540%? In a single day? That's unbelievable.
It is. While retail panics, institutions are making their move. Let's break down the numbers. First, Oracle mindshare hit an all-time high of 14.22%.
Okay, and what about the big players like Layer 1s?
They're holding strong at 19.35%, even in this bloodbath.
That shows real resilience. What else is moving?
Cross-chain protocols surged to 3.32%, and some major regulatory news is breaking.
Let's start with the market fear. How bad is it?
The Fear and Greed Index dropped to 21.28. That's officially extreme fear.
Extreme fear. Yet infrastructure is ripping. It's a total paradox.
Exactly. That Oracle surge to 14.22% is a historic all-time high.
What's driving such a massive move? Is it just one thing?
It's the AI blockchain convergence narrative. Sophisticated capital is focused on utility.
So while sentiment screams fear, the real money is flowing into foundational tech.
Precisely. That's why I call this a builder's market. Now, about that regulatory earthquake.
Yes, you mentioned big news in the United States. What's happening?
Michael Selig was just unanimously confirmed as the new CFTC chairman.
Unanimously? That's huge. What about legislation?
The Clarity Act is set for Senate markup in January 2026.
And what will that act actually do for the industry?
It will finally define jurisdiction between the SEC and CFTC, ending their turf wars.
That's the clarity institutions have been waiting for. A massive step for adoption.
Correct. Speaking of infrastructure, Ethereum is also making aggressive scaling moves. The BPO hard fork 2 is set for January 7, 2026.
What does that mean for the network's capacity?
Right after, they're increasing the gas limit to 80 million. That's a 33% throughput increase.
And that has to be great news for Layer 2 solutions, right?
Dramatically better economics for them. But here's a twist you won't believe. Synthetix just launched their Perpetuals DEX back on Ethereum Mainnet after 3 years on a Layer 2.
Back to Mainnet? Why would they do that now? Isn't that a total reversal?
It is. They're betting that Mainnet's deep liquidity and composability are still king for high-value uses.
Wow, that really challenges the everything to L2 narrative. Any other quick updates?
3 critical ones. 1. Monad is prepping for Mainnet in 2026 with insane testnet speeds.
What kind of speeds are we talking about?
Exceeding 10,000 transactions per second. It's serious EVM competition. 2. Fasttoken surged 171% in a day on Oracle integration rumors.
Pure narrative-driven volatility. And the third update?
Watch if Oracle mindshare can hold above 10%. That's the key metric for this narrative's staying power.
So the big picture is that smart money is building while everyone else is scared.
That's the meta-narrative. The Oracle breakout, L1 resilience, and regulatory progress are all connected.
This market moves so fast. How can people possibly stay on top of all these shifts?
That's why we deliver updates every 12 hours. It's the only way to keep an edge.
So what should they do?
Hit that subscribe button and turn on notifications to stay ahead of these critical moves. Stay strategic.